Hi guys, Wale here. In today's video, I'll be showing you the trades I'll be taking for the week. Today is 10th of December. I will show you the trades that would run from 11th to 15th of December. This was meant to be a live stream video where you would get to interact with me, but I'm unable to set up the YouTube live stream because I need 24 hours for them to confirm my details and for me to be able to do that. So I've resorted to instead recording the video live. So 3 opportunities really: GBP AUD, Euro AUD, AUD CHF, and I'm going to walk you through the thought process behind the trades. Okay, now if you've noticed, there is a common denominator amongst the pairs AUD. Okay, and this is one thing I want you to know as a trader. Before you start trading the GBP AUD, Euro New Zealand, Euro CHF, whatever you want to trade, first look at what is happening to a particular pair. Okay, what is going to happen to GBP as a currency pair, not against any other pair, but as a currency pair. What is going to happen to Euro as a currency pair? What is going to happen to CAD as a currency pair? You get the point. Now, what I have done is to look at AUD, all the currencies that have AUD crosses, AUD CHF, AUD JPY, GBP AUD, AUD USD, whatever that has AUD. And what I could see that is a recurring theme amongst the pairs that have AUD as crosses is that AUD is going to depreciate, is going to fall in value for this week. So the next thing to now do is look at, out of all the currencies, which one do you think you would have an edge if you decide to trade the AUD pair? And I've seen 3: the GBP AUD, the Euro AUD, and the AUD CHF. Remember, I said AUD is already printing bearish signal for the week. So what I want to do is to buy the GBP AUD, buy Euro AUD, and sell AUD CHF. AUD is the base currency. AUD is appearing as the quote currency here, and it's also appearing as the quote currency here. Okay, so from the technical point of view, let me show you what I'm saying. What I like to do is to do a top-down analysis. I go from the weekly time frame to the daily to the 4-hour. Not usually the 1 hour, but for entry purpose, I use the 1 hour. Okay, and I will show you the thought process. So from the weekly time frame, look at this candlestick. This is called an inverted bullish hammer. If it is found on your screen, it means that price is likely going to go up. Okay, now see, for the week, this is on the weekly time frame. The bulls were able to push price up to this level, but they were met with resistance by the bears. Market started falling and it closed there, creating what I call a liquidity week. So for the following week, which is this week, the bulls are still going to enter this market. They are going to fill up this liquidity. Okay, so that is one confluence. You need multiple confluences. And by the way, as you can see on my chart, I don't have any indicators here. They don't work. I have to be very honest with you. They respond slowly to price. They are mathematically computed, so they really don't work. Okay, but what I want to show you is how to interpret the market using price action. Okay, inverted bullish hammer on the weekly time frame. Let's go to the daily time frame. Okay, can you see area of demand here? When price got here, what happened? Price went all the way up. What happened? Check it. It went all the way up. It touched there. It went all the way up. Okay, now let's go to the 1 hour, which is giving me a better picture of the market. Let's see. Can you see that price has been going in a range up down, up, down. Okay, and it's still going to happen because the formation of that inverted bullish hammer on the weekly time frame is already telling me that a liquidity wick has been formed and price is likely going to fill the wick. Okay, then how do I enter the trade? Beautiful question if you ask me. Now on the 1 hour time frame, let me zoom out. You can see all this clear area of rejection by the bulls at support or at demand zone, whatever you decide to call it. Can you say price rejected from this area as well? So I'm going to wait for price to get to this level again, and I'm going to enter a buy trade here. But the way I often like to structure my trades, okay, I have different strategies, but let me tell you one. And I trade on multiple accounts using different strategies on the same currency pair. Okay, but I'm only going to tell you one for the purpose of this video. So for example, let's say I want to buy this pair with $100. I am not going to enter this trade with the full $100. Okay, I'm going to split it into two. $50 on the first trade, $50 on the second trade. Okay, the first trade I'm going to look for a 1-to-1 risk to reward on the trade, and on the second trade I'm going to look for minimum of 1-to-3 risk to reward ratio on the trade. Now let me show you what exactly I mean by that. Okay, so for example, let's say I intend using $100. Okay, I will go to this app. It is called FX Calculators. Okay, you can download it on your app store, on your Play Store if you are using an Android device. FX Calculators. You can also use Baby Pips, whatever, it doesn't matter. So I'm going to head over to this place called position size. I'm going to toggle it. Okay, so I intend trading GBP AUD, right? So I'm going to change this to GBP AUD. So I'm doing that GBP AUD. Okay, so for example, let's say your account size is 5,000, but you intend using $100. You split it into two. So here I'm going to put $50. Okay, then you have to calculate your stop loss. Your stop loss will determine the risk or the lot size. So let's quickly get into that. Where am I going to enter from? Here and here. The first trade here, the second trade, entry point here. Because what might happen if market opens for the week is that price might not even come to this level. It might just start going up. Trust me, I have seen it from experience, and I'm going to do another video when market opens, me taking all these trades, and I'll give you the live results. Okay, but what I'm trying to say is this is a Friday. Market might open on Monday here and start going up. I might not even come down to this level. Okay, so what I'm going to do is first mark my first entry level, my second entry level. Then where do I want to keep my stop loss? Below this recent low. So if price touches this level, then take me out. However, that is unlikely from, again, analysis. It's unlikely. There is an 80% chance that price is going to go up this week on the GBP AUD. We would find out. Okay, so now you can see right here that this trade offers a 1 to 3.19 risk to reward ratio, meaning if your bet size is $100 and you are correct, you are going to earn $319, which is fantastic. Okay, so this is where I want to enter, and this is where I want to take my profits. Why am I taking profits here? Because this is another swing high. Take me out at this swing high, cut me loose at this swing low. It's that simple. Don't make things complicated. Okay, So what's the stop loss? Like I said, the stop loss will determine the lot size. So I'm going to come here, you click on settings, you come to input. Okay, so what you can see is the entry price is 1.89740. The profit level or the take profit is 2,759. But what you do is you divide it by 10, meaning your actual profit level is 275 pips. You ignore this last one, divide it by 10 to give you 275. Then your stop loss, you can see 864 divided by 10 to give you 86.4. So my stop loss is 86.4, my take profit is 275.9. So I'm going to come right here, okay, and set my stop loss as 86 pips 0.4. Okay, so it will tell you the position size to use. Look at this standard lot. Where you have this standard lot, that's your position size. So the position size will be 0.08. okay, so that's on GBP AUD. GBP AUD is going to go up for the week. However, it might not come down to this level, and that's why I am going to go for another one-to-one trade. Okay, so immediately market opens, I'm in the first trade. You also determine the stop loss and the take profit on this. So stop loss 177 pips, okay, take profit 185 pips, which is also a one-to-one. Okay, so that's what to do, that's how to trade that. Then the second trade is on Euro AUD. In fact, this one is even having better signal. Let's go to the weekly time frame. Can you see the same pattern forming here? An inverted bullish hammer, an inverted bullish hammer. Okay, guys, price is going to fill this week all this space. Price is going to fill all this space you're looking at here. Can you see that is the same pattern? So where do I want to enter this trade from? I've shown you the pattern on the weekly. On the daily, can you see a lot of rejections here? As price is touching this level, is going up, it's getting here, is going up, it's coming all the way here, is going up. Okay, classic price action patterns. So where is my stop loss? Stop loss 56 pips. Remember I told you divide by 10, divide this by 10. Also my take profit is 223 pips, and that is how I catch all this swing movement. That is how I catch 100, 200 pips in the market. It can be better than this. Okay, now weekly time frame, inverted bullish hammer. Daily time frame, can you see this doji almost forming a hammer? This is not a hammer, but it's a doji. So my first entry will be here, my second entry will be at this area of value, which is the demand zone. And for this trade, it is offering a 1 to almost 4 risk to reward ratio, meaning if you put in $100, you are going to earn $396, which is fantastic, absolutely fantastic. Okay, so that is that on Euro AUD. Again, how do you determine the lot size to use? Come to settings, input. Okay, what is your stop loss? You put it there. Let's do that. Okay, so here, let me drag this here. The instrument I'll be trading here will be Euro AUD. Okay, what is the stop loss? This is it, 56.4. So I'll just jump ahead and put it right here, 56.4. How much are you willing to risk? $50. Okay, so then you scroll down to position size. Okay, so the standard lot to use right here is 0.13 standard lot. Okay, and the risk to reward is 1 to 3.96, almost 1 to 4 risk to reward ratio. However, again on this trade, price might not come all the way here, so you want to enter the first one here, which is 1 to 2.3. okay, meaning if you put in $100, you earn $123, which is quite fair. or if you put in $50, 50 times 1.23, okay, which is almost $60. So that is one. Then you would be patient for price. You have to be patient, guys. Don't force trades, okay? Plan the trade and trade the plan. Don't force any trade, okay? Don't trade because of the fear of missing out. If nothing happens, you just jump into another trade, okay? Don't force trades. I'll wait for price to come down here and throw me into the trade here. Now, why am I setting my... Let me go to the 1 hour time frame. Can you see how I am jumping between time frames? Okay, that's multiple time frame analysis. Now see here, guys, I've gone past in time to see how price is reacting to this level. Can you see how price is rejecting from this level? This is an area of demand. This is where the buyers are sitting. Okay, they are ready to buy the market here. Now let me scroll forward. Okay, can you see that the same thing happened here? Price came here and it started going up. Price might still come down here and start going up. Again, nobody has a crystal ball about the market. Anything can happen. If you have a crystal ball, if you know what is going to happen 100%, you might as well just retire into your room and start printing money, because you know it all. You know what price is going to do. But that's not the case, okay? I don't have a crystal ball, and don't let anybody fool you. Nobody has a crystal ball. Nobody has 100% winning strategy. Nobody. Even the highest paid Wall Street fat cats, hedge fund managers, institutional investors, check their average win rate. Okay? It's barely 60-65% for the ones that are exceptional. 65%. Okay? And they make average return of 12%, 11% on their portfolio per annum, guys. 10 to 12%. But you know they are trading huge volume. 10% on your $1,000 account cannot be compared to 10% on a $1 billion portfolio or on a 100 million portfolio. That is the difference between the institutional trader and you or me, that we are retail traders. Don't trade because of fear of missing out. Allow price tap into your zone, okay, and let it go up. By the way, the first one will be taken here immediately the market opens for a 1 to 2.3 risk to reward, while the second trade will be taken for 1 to 3.96. okay. Then lastly, AUD CHF. Remember I said AUD is going to fall. That's the signal I'm seeing. See guys, let me show you. I shouldn't be showing you this, but okay, I'll just jump ahead and show you. This is a book I wrote, Hack to Price Action Trading. It's selling for $30, and this is one of my candlestick pattern. Okay, I'm here to set up the payment platform and stuff like that, so you might not be able to get it, but I've researched several candlestick patterns. If you see this kind of candlestick pattern, market is likely going to go down. The next candle after this one is likely going to go down. It's called a bearish long tree pattern. Shouldn't be showing you, but I'm showing you for free. Now, where am I seeing this? Let's go to the weekly time frame. Okay, can you see it from here? This doji and this long-legged doji. Okay, can you see I wrote this book over a year ago. It's a clear bearish signal. In fact, this is what made me confirm that AUD is going to fall for the week. It is formed on the weekly time frame. Can you see it's a exact pattern? From analysis, from spending over 3,500 hours in the market looking for candlestick patterns like this, high probability candlestick patterns. By the way, I have over 30 of these. Okay, it has shown me that if price gets here, then it's not going to work out. Just bail out of the trade, cut your losses real fast. Okay, but from what I can see, price is likely not going to even get here. So on the 1 hour time frame, which has given me a clearer sell entry, I'm going to sell here, the recent swing high. Then I'm going to take my profit at the recent swing low for a 1 to 3.31 risk to reward ratio trade. Meaning if you put in $100 on this trade, you are going to earn $331. That is a very beautiful risk to reward ratio trade. So on this one, what is the profit level? 99 pips. Stop loss 30 pips. So I'm going to come here, do the same thing. Okay, I'm going to change the currency traded to AUD CHF. Doing that right now. $50 was the stop loss, 30 pips, 30.2 pips. Okay, so you put it, then this app would automatically calculate the lot size to use, and it has told you 0.14. You will see standard lot, you will see mini lot, you will see micro lot. You go for the standard lot, okay, which is 0.14. all right, so that's the trade for the week. Why am I going to take my profit here? Because again, if price gets here, it might start going retracing upwards, so I don't want to allow a winning trade turn into a losing trade. So I will take the first trade here, this swing high, the recent swing high. It's clear, you can see it here, swing high. Okay, then the second entry, when immediately market opens for a 1 to 2.4. Again, you go to your position size calculator or your FX calculator to determine the lot size to use for this risk to reward ratio trade. So guys, that is the trade for the week. GBP AUD going up, is going up. The bulls are still very much in the market. Euro AUD going up, the bulls are still very much in the market. AUD CHF, which we've established that AUD is going to fall for the week, is going to go all the way down to this level, and you'll be surprised that immediately market gets here, it might start going back up. Immediately price gets here, can you see? These are the sellers region. You don't want to joke with the sellers. You don't want to taunt them. The buyer, buy here, buy here. Okay, so that's it guys, if you actually want me to keep doing videos like this, all I need from you is to smash that like button. Keep smashing that like button. I would keep creating content like this. And if you are yet to subscribe to this YouTube channel, it will help you. Till I come your way again, signing out, your boy, the boy hedger. Bye bye.